All right, here we go. Episode 16 of the What Do We Do podcast. Kyle Bogey and Dewey Stefan here with you. And we have a lot, actually, that we're going to cover on this episode. A ton to dive into. We're certainly going to remember an anniversary that I think a lot of people are trying to forget. Unfortunately, that happened on Friday. We will, of course, touch on what this fall is going to look like with the upcoming elections, and certainly take a peek at the outlook based on which potential party could end up winning. But I guess first things first, Dewey. Good to be here again, and I know we wanted to open up talking about 9/11 and the 19th anniversary, because it was just this past Friday, and it's bizarre that it's been almost 20 years to this point. It really is.
Yeah, hi, Bogey and listeners. Nice to be back and to see you. Episode 16, right? Fantastic. And it's bittersweet as we're here talking about freedom and the American dream and just life as an American, if you will. We have to take a minute and just remember those horrible events of September 11th, 2001.
Now, for me, I was actually in middle school. I was a seventh grader, and we had the eighth graders running through the hallway yelling, "World War III is underway," and all this stuff. We had no idea what was going on. I was just a young kid. You, of course, were already in the professional arena. You were actually working that day, weren't you?
Yeah, I was working that day. I worked downtown Detroit for Citigroup Smith Barney at the time. And, that's a day that I will always remember the events and watching it transpire on CNBC, just like everyone else. And, the immediate impact was that it was uncertainty. No one knew what was going on. The reports were inconclusive immediately. And, then as we found out, days later, the horrific outcome that was there, I then reflected back to my time in New York, my time inside the World Trade Center 1 and 2. And again, because of, I don't know what I do for a living or where it happened or, the fact that I knew some people that were there, it's just something that, we would absolutely be remiss if we didn't just let everyone know that it's still in our thoughts and prayers.
Yeah, and obviously a fitting, day and anniversary and time for it as well. Obviously our country is going through a lot right now. So to be able to just take a day, maybe even a weekend, if you spend a few days, reflecting and thinking about it. I always go back and watch the videos and some of the news clips and everything like that. Important, to remember, everything that transpired. We do also want to make mention of, something else our country is dealing with right now, and that's thinking about our Patriots out on the West Coast, because it's nasty what's going on in California right now, unfortunately.
Yeah, California, Oregon, and up in Washington. We have West Coast clients, and talking to them late last week and as recently as today, it's unbelievable. It's horrible. I think 35 people have died. There's 17,000 firefighters battling these fires. 5 million acres have been destroyed, over 3 million in just California alone. So as the headlines talk about a lot of other important issues of the day, I also think we need to recognize what's happening with those wildfires out on the West Coast.
All right. Well, obviously a little bit of a somber start to episode 16 here. And again, we appreciate everyone listening, downloading, subscribing, sharing, giving feedback. What we've been able to do here through 15 episodes on the What Do We Do podcast. And again, we always encourage you, if you want to find out more information, you want to learn a little bit more about investing and maybe what you should be doing, not doing, you can always go to greatlakeswealth.us. There is a ton of clickable information and things that you can learn, interactive videos, a ton of stuff, a ton of content really that Dewey and his team have, for you to just educate yourself. So make sure you go ahead and do that. Now, Dewey, as I mentioned, at the start of the show, kind of just a preview of what we are going to dive into. This is going to be a critical fall, I would say, for the United States, for our country, as we move forward, into the next 4 years. We have an election coming up in November, and we're going to be hearing about it quite a bit here over the next month and a half, probably a little bit too much, all the political ads that you're going to see or hear potentially on the radio. But this is always an interesting time for the market, so we have another month and a half, but really, once September kind of hit, a 2-month stretch where it'll be interesting to see what ultimately transpires. But I guess we'll start with historically leading into an election. What are those 2 months like? What is this final month and a half normally like going into an election as it pertains specifically to the market?
Well, again, you have to look back, and depends on the period of time that you want to focus on. And Bogey, we kind of done some work to see what would happen from now until the election. We looked at maybe September 1st through October 31st, the 2 months prior to the election. Are there any trends that are in place for specific investments or the broader markets, et cetera? So let's talk on that for a moment or two and kind of set up for this election. But before we do that, I'm going to catch you on the fly with, do you know the date of this year's elections, Kyle?
November 4th?
Oh, so close. November 3rd. Yeah,
Dang
you got it. Tuesday. It's a Tuesday, right?
Of course.
Absolutely. So, yeah, this year's elections, which will be for the 59th president of the United States. It's the 59th election. We've had several presidents that have served, 2 terms. So it will be for the 46th president, but it's the 59th presidential election on November 3rd.
And as important as it is to be educated and be on top of it and, make sure you cast your vote for whatever side or whatever party you might be interested in, I will say this before we get into it. I'll be really glad when it's November 4th and it's all over, because that's really the date that I'm mostly looking forward to, even though who knows how long it'll take to determine everything. But I'm not the guy who wants to turn on the TV and see all of the political ads. I get why you got to do it, and we need to encourage as many people as possible to, figure out what they stand for, what they want. But man, it'll be nice when that day comes.
I understand. I don't know if you're old enough to remember when there was the hanging Chad. There was the election results of Bush and
Gore.
Gore.
I want to recount.
You got it. I want to recount, right? So let's hope that doesn't happen. Otherwise, you won't wake up on the 4th and, be put to bed. So, yes, with that, this podcast is going to be party neutral. This podcast will be, just focused on the facts as we see them from the investment perspective. We call that nonpartisan. Have you heard of this, Bobby?
Absolutely.
Okay. So that being said, we did look at the 2 months before the election. We will tell you also there is some history about what happens 3 months before the election might be a precursor of who would win the presidential election. So we'll talk about the 3 months up to it from who may win as a little crystal ball, we could say. And then after that, we'll talk about the difference between the two candidates and how that may affect the markets after November 4th or when they would take office, whatever that would be in January, right? So with that, we looked at elections going back to 1976. Okay, so 11 elections going back to 1976, and Republican presidents, Democrat presidents, and we want to just see from September 1st through October 31st, those 2 months, what kind of happened with the broad indices, because we talked about in a prior episode that September is the worst month of the year in general, right? October is not much better, and so in that sense, we looked at the Dow, the S&P, the NASDAQ. We also looked at gold, silver, and then the U.S. Ag Bond Index. Fair?
Mm-hmm.
Okay. And so each of those had different levels of basically going down. So all of them went down except for the bond market. All of those indices had negative annualized returns, okay, for those 11 election cycles, except for the bond market, which on average was up, again, for those 2 months, 1.21%. Okay, the Dow was down on average 1.38, the S&P minus 0.90, the NASDAQ, the tech-heavy NASDAQ that's been driving this market, was down on average 1.8%. The gold market was actually down 0.61%, and silver was actually down 1.91% on average. And this is according to NASDAQ Dorsey Wright, which is a research company that we subscribe to. Okay, fair enough?
Absolutely.
Okay, so then, because I know you're on your game, Bogey, you would say, wait a second here. We got 2 elections that really might skew all these results. And I would say, Bogey, what are you talking about? What do you mean? And you would say
2008 would be
got it.
one.
Yep.
I don't know if I would know the other.
The other would be the year 2000, Y2K, and the events that led up to
Fair enough.
the
Yes.
9/11 event that we talked about. So the market had a huge drawdown from 2000 to 2002, and then obviously the one in 2008, right?
So are we throwing those out
So
of the data a little bit?
Well, so what we decided to do, again, with the help of Dorsey Wright, was throw out the 2008 decline. Okay, because that was broad-based. That was basically all sectors except for the bond market and the precious metal of gold, held in there pretty well. So if you take out 2008, okay, you leave in 2000, take out 2008, you have all of them are now positive. Okay, but the least positive is the NASDAQ, and the most positive is still the U.S. Ag Bond Index. So it does tell you that one bad number can affect the entire set that you're looking at if there's not enough data points. We looked at it, again, a little bit more in detail about if there's a Republican in office leading up to it or the Democrat leading up to it. And at the end of the day, we've come to the conclusion that your gold and precious metals and your fixed income, your bond investments, were the ones that probably gave the most protection, but also gave the most alpha or actual returns during those 2 months leading up to the election. Make sense?
Yeah, absolutely. Yeah.
So again, we kind of just left it there that, in any market, including the one we're in now, there are opportunities, there are pockets of strength and pockets of weakness, and the market will be volatile in September and October historically anyway. But there was nothing conclusive from what we saw except that expect volatility. The markets may actually trend lower, but your fixed income or your bond market, as well as the precious metals, may be the safest place if you want to stay away from the volatility leading up to November 3rd.
So is that what you're expecting here, I guess, over the next month and a half is kind of along the same lines of what, the trends are that you just kind of pointed out, that this next month and a half is going to be, volatile. It's going to continue that pattern, essentially, of election years?
So we believe that in general, yes, because, again, noise, and we have debates coming up. There's 3 presidential debates. The first one slated for September 29th, then October 15th, and then October 22nd. There's a vice presidential debate scheduled for October 7th. And so those will probably give some hype and some added volatility to the period. But in general, election or not, you have traditionally the September and October volatility that's there anyway. So with on top of it where the markets are currently, but you also have the Fed, which we talked about before, the Fed put, and interest rates at basically zero, and the Fed saying they'll be accommodative, means that you better believe in volatility, and you better just have a long-term approach. And if something happens in the short term, take advantage. But from what we do, long-term investing, sometimes just put sit on your hands and just kind of pay attention and take it that way.
How much of a factor do you think the COVID-19 and the pandemic and this entire last 6 months, basically, that we've been dealing with impacts, I guess, the next month and a half? Do you think it'll play a significant role, or do you think this will be, the election and the ups and downs of the debates and, all of that will be the main factor in determining what happens with the market?
I think they'll both be included
Both
in
play
the
a
same,
role,
yeah,
sure.
in the conversation. If COVID comes back with a vengeance and we're all shutting down again, then that on its own may supersede, and that may move to the markets and move to other byproducts of what's happening. If COVID doesn't seem to be as much of an issue, then again, it may help, focus on those other issues that are here. What if there's a vaccine in the next 2 months? Is that helpful or hurtful? Is that just create more, challenges that are out there, things to consider, or does that make us all, sing kumbaya and happy, here we go again, right? So there's so much to go on, Kyle, but to the point of your question, another company that we do business with, Hartford, the Hartford Funds, they've done some research on the upcoming election. So if we now move to the election coming up and what may be issues of the day and or post November 3rd, they surveyed their clients, and with the cross-reference of their clients, the issues that were most important to their clients were the following.
Hey guys, it's Bogey. I want to take a second to talk to you about Dewey Steffen and his excellent team at Great Lakes Wealth. Look, do you feel overwhelmed with managing your assets in today's financial world? How could you not? I mean, think about the times we're in here in 2020. Do you want financial freedom? Great Lakes Wealth offers Wall Street solutions with Main Street values. They sit down with you to develop custom financial solutions utilizing all of your assets, even your 401k. We build the future you want based on your goals and your dreams. That's what Great Lakes Wealth is all about. Thinking about you, thinking about your family, and thinking about your future. Simply go to greatlakeswealth.us to schedule an appointment today. They offer better investments, better service, and a fee-back guarantee. That's right, a fee-back guarantee. Okay, a fee-back guarantee. I'll say it one more time for you if you didn't hear it. Your road to financial freedom starts at greatlakeswealth.us. Please visit greatlakeswealth.us or simply give Great Lakes Wealth a call today.
39% said the economy. Makes sense, right? 33% of their clients said COVID-19 response and what's going on, right?
Wow.
15% said healthcare. And again, the healthcare, benefits that would be there for, Americans. 6% said race relations. Thought that might be a little higher in this current environment.
Yeah, no doubt.
5% said climate change policy, and 2% said trade policy. I thought that might be a little bit higher also, with what's going on with China.
Especially based on the last 4 years. Yeah.
For sure, right? So again, I guess, their clients are investors, so the economy would rule the day. But as you asked, the number two, issue is COVID-19.
Will this be one of those things? I mean, we've talked for months since we started doing this, and I feel like I've learned a ton, just doing this with you, Dewey. But, headlines on one day have had a massive impact on what the market ultimately looks like the next day, whether it be positive headlines or negative headlines. If we're talking about, debates, you mentioned the first one is going to be on September 29th, and then there's going to be a vice presidential debate not long after that in early October, and of course we'll see how many others go into that. If, say, one side ends up performing, well, or they focus on one area and that's something that people are into, are we going to see, kind of a shift in the market where it's going to spike up, it's going to go down based on what potentially comes out of these debates? Or is it too hard to look into that?
I would imagine it does.
Yeah.
For sure. Maybe for at least an hour the next day, maybe for the next day on its own.
Yeah.
That's what happened when the Democrats had their national convention and then the Republicans had theirs. So headlines, we've talked about before, headlines rule the day, right? So off of the news or who wins the debate or this and that and the other, you're absolutely going to see traders try to get the edge, the trader's edge. Bogey, there you go with that, right? But for the election itself, there's two trends, no matter what, that we're paying attention to. Okay, we talked about before the election for 2 months, we might be able to find a little bit of solace in bonds and maybe some gold and other non-aggressive investments. But we also know that history tells us by an 87% probability factor that the 3 months leading up to the election, if the S&P is positive, right, for the 3 months before the election, you follow me?
Yep.
If the S&P is positive, the incumbent keeps his seat. The incumbent wins re-election if the S&P is positive the 3 months prior to the election, 87% of the time.
So we basically have a month and a half already into that 3 months. Has it been positive the entire time?
So it was positive, then it went a little bit negative because of some drawdowns. But yes, so it's positive at this point.
Interesting.
And it's very interesting because Biden has, at last count, a 7%, 8%, depending on the poll. He has a pretty clear lead in the election from the pollster perspective, right? So if you believe that, then we're talking about the blue wave, they call it, where Biden becomes president, and if they can somehow get the Senate and they already have the House, then they have complete control, that being the Democrats, and they will be able to really, push some policies through. But again, he has the lead according to the pollsters, but depending on how this S&P does, you have odds for or against current President Trump.
Well, in general too. I mean, we're trying to be fact based here, and nonpartisan and all of that. Last election cycle, certainly the pollsters and all of that had the Democratic candidate winning, being in the lead, and that ultimately wasn't the result of the election. So certainly something to pay attention to over the next several weeks. So I guess as we start to look at each individual party, I guess for lack of a better way of asking this, which party historically, and maybe even moving forward here, I guess moves the market the most, or would move the market potentially more, in your mind and in what you've seen over your years in your career?
Yeah, historically, and again, a lot of investors are doing this research because it's readily available through the internet, and it's only 6 potential outcomes.
Okay.
Republican president, Democratic president, right? And then you have a Democratic Congress or a Republican Congress. And then that would be either if it's a Senate and a House and a Democratic Senate or a House, right? So you put those in. You can have all blue, if you will, all red, or a House divided along with that president. You follow me?
Mm-hmm.
So we know that there are key issues, and we know that each presidential candidate has their platform. We'll skip through the Donald Trump saying that his would continue as is now if he's reelected.
Sure.
And then it would be if the Senate seats that are up don't weigh, then the Senate would stay Republican and the House is currently Democratic, right? So if things stay status quo, we would understand kind of where things would be for the next 4 years, right?
Mm-hmm.
We'll talk about if that means things go up or not in a moment. However, if Biden wins, it's not just if Biden wins. We understand pretty succinctly from his platform what he says he would like to do with the tax rates and other spending policies, et cetera. And so we know what his agenda may be, if you will, but it doesn't mean if the Senate is Republican that he will get anything done or won't have much success compared to what he would hope to. If the Senate does flip over to the Democratic side, then it's an easier road to get his policies through. If he has Democratic support in the House as well, then that's all 3 the blue wave. Somehow maybe the Republicans control the House. That's unlikely. That's the most unlikely. The Senate is most likely going to continue to be Republican. And then again, it really comes down to who would be president. But Biden has the lead according to the polls, and he has some very specific economic differences in opinion or agenda than the current administration. So we got to pay very close attention to that.
Okay, so I guess specifically, and this is a multi-layered question, and we'll do it for both sides here. Come November, 4th, the day after the election, Joe Biden is the next president, the 46th, president of the United States. How much of an impact, positive, negative, whatever, will that have on the market?
So the key issues with the election are the economy and tax reform.
Mm-hmm.
And that we agree. And this is kind of ours, I guess. And if you can go, again, look at Reuters or look at other news services, they would probably have them in this case. So it's going to be a little bit different than what we said for the Hartford and their investment community, okay? So we would actually have the second most important issue as the racial divide. So we would have that up there at number 2. And then number 3 would be healthcare, then immigration, climate change, foreign policy, and then the technology regulation and different things going on in that space. So that being the case, we would agree that economics or the tax reform is number 1. And Biden has 5 tax proposals out there, best as I know. And in general, the largest one is to undo the tax cuts of 2017 and go back to how they were, and that would make the highest tax bracket 39.6 from 37. I think he also wants to raise corporate taxes back to 28% from 21%, ending the step-up basis at death, applying Social Security payroll tax on incomes over $400,000, et cetera, et cetera, et cetera. So all that to say is that on the surface, if Biden wins re-election, or Biden wins election, if Biden wins election, and the Senate would be Democratic, then you could push some of these through, and then we would argue that the markets may have a period of weakness because, again, if there's more money that are coming out of people's pockets, less money to go into investments.
Mm-hmm.
So that's kind of the worry out there on Wall Street, is that if Biden wins election, then the markets may have a soft patch post his election. We believe that either way, the economy is going to continue on, the stock market will continue on, and we would argue that going back, 100 years has proven that no matter whether it's a Democrat or Republican, all three blue, all three red, gridlock, whatever you want to call it. We believe that Wall Street will figure out how to thrive, not just survive.
Sure, I like that. So I guess on the flip side of things, because prior to COVID-19, I think, just rooted in facts, you can say the market, economy, doing well. Certainly, I think you can say that. Obviously, unemployment, was very low. If this president in this climate is to be, reelected, what do we see from the market?
If the status quo stays, you will, again, not have a lot of undoing of what's been done. Yeah. We at Great Lakes Wealth kind of have our own little take on what may happen, and it's a little, outside the box thinking, and we may be dead wrong, but we also may be right. And we kind of also understand that when you have a second-term president, they kind of become a little bit more confident, if that's a very polite word of saying, that they know that they have 4 years and they don't have to run for re-election again, so they can kind of push through their agenda even more. Mm-hmm. So that being the case, I think Wall Street would understand that. And I believe that either way, whichever president ends up being elected and however it goes with the Congress, we kind of think that investors in general will take a pause to just reset their own table. So we would not be going all into cash the night before the election or anything like that. No way, no how. But we would certainly expect maybe additional volatility after the election. And we would probably say, a few points lower between the election date and the end of the year, which, by the way, is opposite of what history shows. History actually shows that trend number 2, as opposed to the first one, which was the 3 months prior, if the market's up, that president gets reelected, right? The other trend is that regardless of which party wins, the S&P has historically rallied 3% through the end of the year. So again, nothing's 100%. But so this time we would kind of say, be a little cautious after the election as well. And then no matter who is in the White House in January, we will find the opportunities and they will be there for sure.
I'd be curious to know if there is a difference or a way to compare, or maybe some data even, I don't know, based on a president that is a 2-term president, that does, like you said, have the luxury of 4 more years. You don't have to worry about re-election. You don't have to worry about campaigning the last year or so, of your final term versus, potentially this Democratic candidate, Joe Biden, depending on what you read, might only be a 1-term president. Do you think that would have any kind of an effect on the next 4 years?
I don't think so. I think ultimately what happens is what's his policy and what typically happens. So
what he'd be able to get through.
For sure. And really, again, it would be tax. It would be a tax situation. Back to that economy, right? Yep. So with that, we do know that estimated earnings on companies due to Biden's tax plan would basically affect all sectors of the S&P. Another question for you, Bogey. How many sectors are there in the S&P?
There are 11 sectors.
Booyah.
Bam.
My man, he got it. Fantastic. So there's 11 sectors, right? And the ones that would be most affected by the tax plan, meaning it would affect those corporate earnings, would be communication services, healthcare, consumer staples, and technology, right? So communication services and technology have been the 2 sectors that have been, all aboard the train this year, right? That means that there may be a quick and a swift drawdown to those in a situation of Biden winning the presidency. But beyond that, again, we will see what happens. If it's him, then great. We'll just take maybe off of those sectors and move it into other sectors that would do historically well with his tax plan or wait it out. So there's going to be a lot of opportunities to figure that out later. But the bottom line, I think, is no matter what, the markets historically do well for the 3 months after the election. The S&P goes up whether it's a Republican or a Democrat. Okay, that's number 1. And then number 2, there's never been, except one time, so I shouldn't say never been, there's only been one time where for the 10 years after an election, the S&P hasn't been higher no matter what. Every other time there's been a president or a presidential election, except for once, the S&P has been higher than it was when the president started, right? And they're not in there for 10 years, obviously. I know you know eight's the most, but the 10 years after that election, the only time was when George Bush was there, and that was the 2000 to 2002 World Trade situation and the rest of it. And I'm going to give you some quick numbers here. If you would have put $10,000 in the market, the S&P back in 1961 with our guy, John F. Kennedy, you know what he said? Do you know what John F. Kennedy said? Ask not what you can do for your country. No. What did he say? You know what John F. Kennedy said? He said, ask not what your country can do for you,
but what you can do for your country. Yeah.
Let's start that again so it's edited out, right? You know what John F. Kennedy said back in 1961? Ask not what your country can do for you. Ask what you can do for your country, right? So if you go back and put $10,000 back in 1961, just in the S&P 500, through June of this year, I'm not kidding, you would have $3,148,529 through June 30th of this year. 10 grand into 3.1 million and change. Not a bad period. That's a long time, 1961 to now, but that's a heck of a lot of money, right? Now I'll go back further. Assuming we find that super drug that keeps us around till the end of time, if you put $10,000 back in the market in 1934, in the the middle of the Great Depression, in the middle of the Great Depression, 10,000 put in 1934, and I'm not kidding here either.
$30 million.
Great guess. $30 million. Well, my data only goes back to 2018.
Okay.
So through 2018, you would have $57,809,000. That's a 10.7% annualized return, right? 1934 through 2018. So bottom line, stay invested with your long-term plan, but knowing what might happen in the short term, whether it's this year or 4 years from now or 8 years from now, etc.
Fascinating stuff. We're certainly going to keep you guys updated on, the moving and shaking. We'll certainly, establish this subject as the debates are going on and as we get closer and closer to the election. But a very good breakdown there, some good details. We'll all be monitoring it and watching it here as we move forward. Should be a very, very interesting fall for the United States of America. But that's going to do it. Episode 16 of the What Do We Do podcast. Again, we appreciate you guys listening, subscribing, downloading, sharing. And if you do want more information, investing, whatever it may be, anything, wealth management related, please, you can always go to greatlakeswealth.us and get as much information as you possibly can.
Bogey, I'm going to end with two quotes, one from the Republican side, one from the Democrat side, to keep it all on the up and up. And the one from the Republican side, we're going to go with Ronald Reagan, who was quoted as saying, "Live simply, love generously, care deeply, speak kindly, leave the rest to God." Okay, fair enough?
Sure.
Your guy, Ronald Reagan, okay? Your other guy, Bill Clinton, was quoted as saying, "We all do better when we work together. Our differences do matter, but our common humanity matters more." And with that, I want to say thanks for listening in to podcast 16. 17's on deck.
The opinions expressed in this program are for general information purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It's only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risks and possible loss of principal capital. Please seek advice from a licensed professional.